Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So I want to cover something else on MACD this week in the lesson. So I'm going to cover the crossover signals. I've gotten a few questions on this recently, and it was something that I struggled with early on when I was using MACD because everyone kind of looks at the crossover signal as being a buy signal. And so I'm going to go through, let's go ahead and look at the agenda. I'm going to go through what I think the crossover signal is actually doing for us. What's it telling us really? And when I think it's actually a good signal and when we want to wait for a signal that I came up with, which is called a pinch play. And I'll explain exactly when and why I use the pinch play quite often, depending on what that crossover signal is doing and when it's taking place. And then we'll go through the symbol requests that came through. So let's go ahead and get into this lesson now. Okay, so I've got a chart of Apple using a weekly chart, and I've got these up and down arrows just showing the crossover signals where MACD is crossing over its signal line. All right, that's where these are lined up. And what I wanted to do is just give you a feel for at least the way I look at it. I did this for a long time, especially when I was short-term trading, watching these crossovers, and it started to dawn on me that, if you read the books and everything, they tell you that the crossover is a buy signal. And I kind of find like, what I view it as is a bias. It's improving the bias or deteriorating the bias. If it's an upside crossover, the bias is improving. If it's a downside crossover, then, you're getting more of a negative bias. But it's not necessarily a trigger, all right? And that's why I came up with this 2 time frame pinch play, because what I notice a lot of times is that you'd get these signals that would, especially if you look at, let me just give you a few examples of what I'm talking about. Look at this crossover here. Notice how we make a move off the low, and then we kind of have a pause bar, and then we have a big strong bar to the upside, another big strong bar to the upside, and then we cross over, in this zone up here after a pretty substantial move. I mean, I don't think that's very timely as a trigger. Like if I'm looking to trigger, I'm trying to get in as close to the bottom as possible. Now, what this does in a crossover scenario tells me that, yeah, the bias is improving. Now we have to see if a trigger forms. And in this case, it really just went up and then came right back down. In fact, it was essentially a zero line reversal to the downside. You see how we broke to the downside and then rallied back up towards the zero line and then reversed back down. But if you notice on the downside reversal, look at how this dropped and then it paused a little bit and then dropped down, and we get a signal, a bearish crossover signal here, which coincides with this bar here after a big decline to the downside. Well, when I see that, I'm inclined to not want to take that signal. I don't think that's a good trigger as a trigger. I'm going to go and look for the pinch play entry, which is either one of these patterns that developed here or here. If you look at this one at the beginning, we had this consolidation pattern and then it reemerged, and that reemergence actually took place on this big green bar. All right. Now, in this case, we had gone up and we paused and consolidated sideways. So this green bar was essentially an igniting bar. It had followed a consolidation pattern. It wasn't extended to the upside. So I would view that as a decent trigger, and we got follow through from that. Notice this crossover actually took place after it had dropped down and rallied back up. That's not as bad of a signal. Now, one thing I want to point out is that when I get a downside crossover signal with rising moving averages, I'm almost always going to default to the pinch play setup, which is here. And why is that? Well, I know I'm going counter trend. So do I really want to fight the trend and do a crossover signal to the downside? Well, I want to look for some sign of confirmation. In this case, we had a little bit of follow through and then it rallied up and this 18 started to roll over and we got the pinch play set up for a move to the downside. So this pinch play pattern is something definitely to be on the lookout for. Let's look at this one. I think this last signal here is actually one of the most interesting. And the reason is that you can draw in your trend line and you can see that that's actually a trigger bar where we're getting a crossover of the trend line, a crossover of the 18, and a crossover of MACD. And it follows an undercut. All right. Now, there's a couple of things. There's a couple of factors here. If you're an aggressive trader and you like to be you're willing to be a little bit early, this is actually, this is your first entry. And the reason why I would consider it a setup and an event, even though this is day 3, is that we're still connected to the 18. It's not like we're overbought. We're just triggering through the trend line, okay? And we've got this undercut. Right? So we've got this reversal pattern potentially developing. Now, I will say this, in my world, in the way that I look at things, while this is an okay setup, this is an okay trigger, I'm probably waiting for this setup here where we get a little bit of a pause. And one thing that I want to point out, the crossover signal is easily seen with the histogram, right? When the histogram crosses back to the upside. So that's happening right here, just a small crossover, but it is showing where this line is crossing over the signal line. So when this histogram goes from negative down here to positive, that is where this is crossing over. So I'm sure a lot of you already know that, but I thought I'd just point it out, make it a little bit easier to see. So what I'm doing is I'm looking at this and I'm almost always looking for the 2, which is we get the downside break of the trend line. That's the 1. And that happens to coincide with the crossover here. Not a bad signal. And in some cases, it's definitely a great confirming sign when the MACD is crossing over like that, even if it's 2 or 3 bars up. If it's coming from a oversold condition where you had some sellers, you're going to get some follow through from that. It's not a bad entry, but I'm almost always going to default to this area here after sort of a pinch play develops. And why is that? Because I think the risk reward is better. So if I get in on this bar and I kind of have to wait for the close to be sure that that is taking place, I've got to put a stop down here. It's pretty far away. Right? If I wait for this and I get in somewhere in here, I have a stop here. The distance between my entry and my exit is a lot smaller. So I'm always going to default to lower risk and not necessarily the low price. This is a lower price, but it's not lower risk. So we want to always identify lower risk if we can. Let me just point out one other example here. Look at this. It's a little bit more blatant. Do you see how this crossover takes place? That this crossover is taking place after a massive drop to the downside. So again, this is not low risk entry. If I'm shorting, I've got to put a stop up here. There's really no other place to put it. Whereas if I wait for the pinch to develop here, I've got pretty close proximity to the 18 again. I've got the pinch play clearly developing, and I've got a nice risk reward play to look at. Now, this signal crossover to the upside was after several moves, and we had this declining 18. We weren't crossing the 18. We really weren't creating a signal. So in those cases, I'm almost always gonna default for more confirmation, and that's waiting for that pinch play to develop. So hopefully this helps clear up a little bit as to when to take the crossover and when not to. All right. If you're enjoying the content, hit that like button and subscribe. Make sure you hit the bell to get notifications for any new content coming out. And just briefly, I wanted to point out that I am offering my book in a PDF format for $5.99. I know that this is a way for people to get a better idea of what my methodology is and a lot of insights into MACD and ADX in multiple time frames. So I wanted to make it a little bit more available to people, and so I'm offering. Obviously, you can get the paperback, which is a nice by 11, big book with big charts from Amazon. But if you have an interest and you just want to get the PDF form, you can do it through this. So you can go to rabelstockresearch.com/book. And hopefully just give you some more insights into my strategies and methodology. All right, let's go ahead and get into the individual symbols. Okay, so as we get going through the symbols, before I get into the symbol requests, what I want to show is a pretty nice component to this ACP program is this market summary page. And I always have it running in the morning. I like to see what is going on. And we've got this kind of mini heat map that shows up at the top, and it gives us a really good idea of where the interest is. Yesterday we had small cap value kind of leading the way, and today we have the other end of the spectrum, large cap growth. So it just gives you a feel for kind of what's going on. I mean, everything is positive here, but it gives you just sort of a flavor of where they're slanting for the day. Now it's early in the day, so I mean this couldn't change, but it's good to kind of reference it every couple of hours, see if there is a shift going on. Let's go ahead and go through. What I want to do is pick off some of the things that I do when I'm going through these areas on the right. So let's just start with the Dow. I want to go through a couple of indices, and then we'll work through a few sectors, and then look at a couple other things. So the thing that really shouts at me here is I see on the Dow Jones weekly, we've got this sideways consolidation pattern. We've got a low ADX condition, and we've also got MACD kind of hovering above the zero line. All of those suggest to me kind of a bullish scenario, especially because of this. If you look at the relative strength, which is essentially a ratio of the Dow Jones versus the S&P, you see how badly this is underperformed, and now we're kind of getting back. You can almost look at this like an overbought, oversold oscillator, and we've gotten stretched away from the moving average of the relative strength, and it just seems to me like the odds favor a little catch up in terms of performance for the Dow Jones. So if we can break out here above this area, I would sort of expect to see this line, this black line, this relative line for the Dow start to show signs of improvement. So something to be on the lookout for. If we look at the S&P, it continues to work up. Some of the things I've been focusing on with my subscribers is the fact that this will not break the 18-day. Now, I do want to point out the distance between the 18-day at 4,400 and the 18-week at 4,200 is spreading out. We're getting there's definitely some separation there. Whereas if you go back to like June, where this was just emerging at the end of May, early June, this was pretty close. The two lines were pretty close. Now we're getting this separation. This is telling you kind of be on the lookout for signs of resistance coming in or signs of exhaustion. The last signal here, we had a minor divergence potential, but it never broke the 18. And then we actually got reverse divergence where this came down and made a lower low on a MACD basis, while this was making a significantly higher low right at the moving average. And now we've emerged out of that for another move. The ADX is telling you that this is a very strong trend. DI is confirming the move still. Okay, let's look at the Nasdaq briefly. Another one that's very strong, but also getting somewhat stretched away when you look at the 18-day versus the 18-week. The good news on both the S&P and the Nasdaq is that the weekly momentum, ADX and MACD are both confirming these moves. So I think we'll hit some resistance here before too long. Maybe it's up towards 14.5 for the NASDAQ composite. But to me, there's no signs of ending action yet, unless it gets climatic to the upside. So something we probably want to be on the lookout for. Now, one other thing I want to point out here is the small cap index. And we've got a monthly chart where the MACD was working this off and has cupped around, and look at what's happening here. We have a zero line reversal, but does anyone see the other pattern that's developing? We've got a reverse divergence as well, right, at the zero line. I like that pattern. I like the volume from last week. I like the fact that we're getting through the 18-month, and we're starting to try and get something going here. So I'm encouraged by this. And when I go through do my bottom up reviews, I'm noticing a lot of improvement in some of the smaller cap names, some of the names that are kind of the first ones out of the gate. And so I think that's going to spill over into the indexes like the IWM and this small cap 600. So just something to be on the lookout for. Okay, let's go through and look at just kind of a few things that are going on in the sector. So one thing I want to point out, number one, XLE is showing improvement overall, but I don't think the big integrated guys, which play a huge role in the XLE, meaning they're huge components in this, I don't know that they're quite ready to get going right away. It's coming from oil equipment and services, drillers, stuff like that is really where we're seeing the strength. So that's where I'd focus my energy right now. I do see improvement in stocks like COP and OXY. So I'm not saying that it's completely going to be ignored by those areas, but right now the real strength is coming from the oil and equipment like SLB or a driller like rig or something like that. Okay, let's look at the XLF because I want to point this out. I think it's really difficult for a market to go up substantially if the financials aren't going up at all, right? I mean, we need the financials to get something going here. And look at what's going on the monthly. This is making a higher bottom in price, and this is now making a lower low. So we've got this sort of reverse divergence taking place, and again, we're trying to get back up through the 18-month line. Now, I think the key is on this weekly chart, we've got this monster red bar. And we're now about to get through the midpoint of that. We're basically climbing through that this week. So I view that as a pretty encouraging sign. I mean, it's not really an all clear until we get through the high of the big red bar. But the fact is that there wasn't a lot of follow through. There's massive support down in the low 30s. And a lot of the stocks in the regionals are way, way oversold, and they're starting to lift off those areas. So I'm sort of encouraged that we could see some signs of improvement on the relative line. You see how this has been stretched away to the downside? Maybe we start to see this kind of catch up to the moving average, and I think that's a good sign for the overall marketplace. Still seeing leadership out of both technology and consumer discretionary right now. Until those break their 18-day lines, most likely we're going to continue to see those relative strength lines keep moving. Let's look at let's go really take a quick look at the TNX, which is the 10-year. And one of the things I've been talking about with subscribers, and I actually mentioned it on this show a few weeks back, is that I felt like the overall setup in this was positive in that it wanted to work its way back up towards 4 in terms of the interest rate at 4. But getting back up through this area seemed to me like it was going to be much more difficult. So it's not surprising to see what is taking place here. We've rallied up into this resistance, and now we're coming back down. I would say the major benchmark here is to stay above this 3.25 level. From a short-term standpoint, I think if we break the moving average here, 3.6, something like that, then we're probably back into a range again. If we stay above that, then we could go and make another move up towards this higher area. I'm just not looking for a massive move to the upside in this quite at this point. And then just looking through some of the commodities, look at the copper pattern. This is something I want to give you an early kind of warning on this. First of all, let's look at what's going on the monthly MACD. You see how this was overbought and then it's worked its way, and we've got this sort of double bottom forming right above the 0 line, and now we have a low ADX condition below both of the DI lines, okay? Really, really quiet in terms of volume. Now let's go to the weekly chart and look at what's going on. We have a 0 line reversal potentially developing with low ADX, and you can really see how the volume has dried up here. So this is an area where I'm looking for signs of an expansion to take place. Again, look at the relative performance line, which can act as an oscillator. It's gotten stretched away. It's kind of oversold relative to the S&P. It's a good one to watch here to see if we can't see some emerging patterns developing. So probably want to start looking at some copper stocks. Okay, so I wanted to make sure I ran through that. Let's go ahead and look at some individual stock requests that came through. So Netflix has been a incredibly strong stock. And a lot of times what I'll do, when this gets above the 18-month, I start to look at where are the key levels to be on the lookout for. And one of the key things to be on the lookout for is actually the big round number at 500. All right, and that's sort of where the next big resistance zone is. So it's possible that we are going to head for that. I think it's more likely that we get some kind of an interim pullback before we go in that direction, just because of how far it's gone already, and we're a little stretched. We're stretched away from the 18-month, and now we're stretched away from the 18-week. But as long as this this ADX line is rising, we have to respect the fact that this could keep climbing without a significant pullback. Again, this is another one where we want to watch the 18-day. We haven't officially broken the 18-day. If we come back down through that, then the MACD probably comes on the daily chart, probably comes down closer to the zero line. And this takes at least, a 2 to 4 week break for what's going on. The momentum is just a little too strong to be looking for a big reversal right now. CRM. So this is something that I think I want to point out, and that is when the ADX line is rising like this on the high time frame, then you don't always look for some kind of a really severe corrective pattern to take place. You look for something like this, really quiet consolidation pattern. And this was the pattern that I talk about, which is a zero line reversal where we come back down towards the zero line and we have low ADX condition in place. Notice how the green DIs stayed above red throughout this whole pullback phase. There was no real sign of sellers at all, and so we wanted to be on the lookout for a trigger. The problem was the trigger happened via a gap, so I wouldn't necessarily say that was really a great buy signal because of the gap, but we knew we were on the lookout for another leg to the upside. Let's just see where the resistance is coming in. A lot of times looking at the zigzag can really help. We can see where right about 250, another big round number, is sort of the next key area to be on the lookout for in this. I think that'd probably be a pretty good target area to monitor and look for signs of either exhaustion or climax. Now, Adobe's actually surprised me because it was so ugly and it was such an underperformer that I thought it would take maybe a little bit more time to get going. But from the moment this kicked in here, crossing above both moving averages again and breaking out of this area and getting above this big red bar with a pretty confirming bar. Look at the volume pattern improving. Look at the green DI breaking out again. All of that was pretty good confirming evidence that we were going to work our way back up. Now, I actually thought we'd get up to this 500 number, big round number, and take a little bit of a pullback towards the moving averages. But look at this is doing. It's not doing that. It's pausing. And because we have a rising ADX line, it doesn't have to come back to the 18 right now. It just, if we get this line to roll over, then we should expect a deeper pullback. The way that's going to start, that whole process will start with a break of the 18-day. So these markets are right now respecting the 18-day. I think we have to do that as well. Until they're broken, I think we shouldn't be expecting any kind of a deep pullback. Let's look at Philip Morris. So this is one, actually Altria Group. This is one where we have this low ADX condition in place, and we've got a pretty firm resistance level up here, 47, 48, something like that. And we can see we've got a horizontal channel in place and a low ADX pattern. So what's the play? The play is not to guess, unless you're going to play oversold and buy oversold, sell overbought, right? And keep doing that. You got to wait for a breakout in this. Let's make this get up above 48, 48 and a half, something like that. Look at coin. Look at what's going on with coin here. A lot of improvement in this pattern on the weekly. We are crossing the 18-month line, and look at the volume pattern in this. You notice since this point right about here, start the year, notice how many bars are green that are above the moving average line. And we've got a few bad ones. But notice this bar is a big, ugly red bar, volume bar, but that was the low of the pullback. You see how there wasn't follow through from that? So I would actually view that as a positive versus this, which is kind of like the top there. But those are really the only two bad bars, and we have a whole bunch of green bars. So when I see the volume pattern like that, I'm pretty encouraged. And we've got new momentum showing up on the daily chart. So I would be watching this for a pullback closer to, maybe somewhere around 80, maybe a little bit below that. Look at DIX. So this DIX Sporting Good has made a really nice move to the upside, but it was like a V bottom pattern off of price support. And when I see this kind of setup, I expect this to consolidate some here as opposed to just going ahead and breaking out. So whenever we try and break out from an overbought condition, we should expect this pattern to develop. Way this has done it is pretty healthy. I think this looks pretty interesting. We probably have to trade it off the daily, and I would let this break out and look to buy the pullback towards 140. Let green DI get a little bit stronger, and I think that'd be the way I'd be watching this right now. But overall pattern looks pretty good. Thanks for watching the show. My contact information is listed. If you have any stock requests, send them to stocktalk@stockcharts.com. Have a great week, and we'll see you next time.